Okay, so we're looking at like this really weird situation right now. It's like the stock market is breaking records, but everyone's kind of freaking out, you know?
Right.
Recession rumors are flying around, things are heating up globally, and even those big shot hedge funds are making some moves that have people scratching their heads. So, are we about to go over a cliff, or is this bull market just getting warmed up? Today, we're going deep on this whole financial puzzle. We've got your research on market trends, global stuff, and even those roadblocks popping up in green tech.
Yeah, and what's interesting is that it's not like people are just being irrationally optimistic. There are some real concrete factors, especially in the U.S., that are kind of propping up this whole market resilience thing.
Right, so let's unpack that whole paradox. Your sources mentioned the S&P 500 hitting these new highs. At first glance, it's like everything is coming up roses. But then you look a little closer, and there are some pretty big red flags.
Absolutely. Fear can really move markets. But you got to remember, markets run on expectations, not just what's happening right this second. And right now, U.S. consumers are spending like crazy, right? The job market's strong. Plus, there's no denying how much influence those Mag 7 companies have. The tech giants. They're basically pouring gasoline on the market's fire.
Hmm.
That whole thing seems to be overshadowing a lot of the other anxieties people have.
It's like they're single-handedly carrying the entire market. But your sources also say that this Mag 7 effect has analysts worried. What if one of them stumbles? Could that take the whole market down with it? I mean, what happens to the average investor then?
It's a legitimate concern. I noticed you highlighted Jim Cowan's work. He used the analogy of a bull in a candy shop to describe how the market feels right now. Like, yeah, everything's great when you're surrounded by sweets, but how long can that last, really? Cowan and some others are saying we're kind of ignoring some basic economic warning signs.
And it's not just about tech companies and those kinds of indicators. We've got the US election coming up, which always throws a wrench in things. The betting markets seem to favor a certain outcome, but your research suggests it's less about who wins and more about what that win means for the markets, right?
Exactly. A red sweep, meaning the Republicans win the presidency and Congress, could mean some really big policy changes. We could see shifts in taxes, regulations, even trade deals. Any of those things could ripple through different parts of the economy. Investors might get spooked, and that could shake up the whole market.
So a change at the top could mean a change in the market's direction. Definitely something to watch. But, your sources also say that historically, markets tend to overreact to elections. Maybe a little history lesson can calm some nerves, right?
That's true. A lot of times, the market's initial reaction to an election isn't necessarily a sign of what's going to happen long term. It's more about how those campaign promises actually become policy and what that really means for the economy.
Speaking of policy impacts, let's switch gears to something else that doesn't quite add up green energy. You've got this huge push for clean technology, right? It's got government support, people are excited about it. Yet your sources say some hedge funds are pulling back on their green investments. Kind of goes against common sense, doesn't it?
Well, it turns out interest rates are a big factor here. Green technologies, especially new ones, they usually need a ton of money up front, right? So when interest rates go up, suddenly those projects aren't as attractive to investors,
Yeah.
especially the ones who want to see a return on their investment quickly.
Ah, so it's like the cost of getting those green projects off the ground just skyrocketed. Makes sense.
Exactly. And then there's the elephant in the room, right? China.
Yeah.
All their economic and geopolitical stuff is making things even more complicated for anyone looking to invest in green energy.
China, right. We talked about their influence earlier. Seems like they're a major player in, well, everything these days.
Yeah, pretty much. The trade tensions between China and the West, especially the U.S., are creating a lot of uncertainty. You've got tariffs, intellectual property issues, the whole trade war thing looming. Investors are definitely hesitant to go all in on green projects if those projects depend too much on Chinese manufacturing or supply chains.
It's a good reminder that green tech isn't just about, innovation and saving the planet. It's tied into global politics and trade, too. So we've got the U.S. market riding high on tech optimism, but there's some real anxieties there. And we've got green energy facing some unexpected hurdles despite all the hype. Now, your research suggests that things might be even more unstable on the other side of the Atlantic. Europe's economy seems to be sputtering, and the European Central Bank keeps slashing those interest rates. It's almost like they're hitting the panic button. What's going on over there?
It's a really different picture in Europe compared to the U.S. Growth forecasts for the Eurozone are, well, they're not great. And even those economic powerhouses like Germany and France are showing some weakness. Those interest rate cuts from the ECB, that's a pretty clear sign they're having trouble getting things moving. It's like trying to jumpstart a car with a dead battery. Might get a spark, but it's not a long-term solution.
And it makes you wonder if they're just delaying the inevitable, right? Is there a bigger economic crisis brewing that these rate cuts won't even touch?
It's a valid concern. And it gets worse because Europe's also dealing with this whole inflation puzzle. We always hear about how high inflation is bad, but super low inflation, that could be a sign of a weak economy too. It could mean that people just aren't spending money and businesses aren't investing. And that can create a whole downward spiral.
So it's not just about inflation being bad, it's about finding that sweet spot.
Exactly. And right now, Europe seems to be stuck on the wrong side of that sweet spot. And it makes you think, could the U.S. be headed down the same path? Are we somehow immune to all these economic problems hitting Europe? Or are we just a little behind?
It's a question a lot of people are asking themselves, especially with all this talk about a recession getting louder and louder.
And it goes back to what we were talking about with Jim Cowan, right?
Yeah.
And his skepticism about this whole U.S. market rally. Remember the sugar high idea?
Mhm.
The worry is that we're being propped up by these temporary things that are hiding bigger problems.
Okay, so let's talk about those potential problems. What are the warning signs that, even the average person should be looking out for? What could burst this bubble and bring everything crashing down?
Keep an eye on the U.S. job market. It's usually a lagging indicator, meaning it might not show signs of trouble until things are already pretty bad. If unemployment starts going up, it could mean that the consumer spending, which is basically holding the U.S. economy up right now, it could mean that's starting to fizzle out. And that is a huge red flag.
Yeah, it's like that canary in the coal mine. It really is wild how connected everything is. I mean, the stock market, global trade, even green technology. It's a lot to wrap your head around. So for everyone listening who's trying to make sense of it all, what's the one big thing you hope they take away from this?
I think the big thing is you can't rely on the old rules anymore. We're in uncharted territory. There are all these unprecedented factors colliding. Instead of looking for easy answers, I think we need to be more curious, more willing to question everything.
So it's less about having all the answers and more about asking the right questions.
Exactly. A healthy dose of skepticism plus a real thirst for knowledge.
Uh.
Those are essential right now.
And maybe a little courage to go your own way, even if it means breaking away from the pack. Speaking of which, we talked about how betting markets are weighing in on everything, right? From elections to the economy. But how much can we really trust those markets?
Well, those betting markets can give you some interesting clues about what people are thinking, what they see as the most likely outcomes. But you got to remember, they're not a crystal ball. They can be influenced by all sorts of things.
Mm-hmm.
Speculation, short-term trends, even manipulation.
So a little healthy skepticism is a good thing there, too.
Definitely. Think of them as one piece of the puzzle, not the whole picture.
Don't put all your eggs in one basket, right?
Exactly. Spreading out your information, your perspectives, even your investments, that can be really important in uncertain times like these.
And then there's this whole other layer of complexity, technology, and finance. Your sources talk about algorithms, AI, big data. It's like something out of Wall Street meets sci-fi.
It is pretty wild to see finance and tech merging like this. Those tools can analyze mountains of data and spot patterns way faster than any human ever could.
But does that mean human judgment is out the window now when it comes to investing?
Not at all. If anything, it's more important than ever. See, those technologies are great at crunching numbers, but they don't get the nuances, the ethics, the gut feelings that humans bring to the table.
So it's not about humans versus machines. It's about humans and machines working together.
Precisely. We need to use those advancements to make better decisions, not to completely hand over the reins.
With all this going on, trying to keep up with the global picture, the constant news cycle of sheer amount of information out there, it can feel overwhelming, even for someone who's paying attention. What advice would you give to someone who feels that way but still wants to make smart financial decisions?
I'd say start with what you can control. Learn about the things that drive the economy, figure out how much risk you're comfortable with, and find resources that work for you. A little bit of knowledge goes a long way.
That's a good point. It's about progress, not perfection. You don't have to become an expert overnight. Just be curious and take it one step at a time. Well, we've covered a lot of ground today. We've seen the highs and lows of the market, uncovered some hidden risks and potential opportunities, and even taken a look at what's going on with Europe's economy.
And I think the most important thing is to remember, uncertainty is just part of the game. It's not something to be afraid of.
So as we all navigate this wild world of finance, The key is to stay informed, question everything, and never stop learning. Thanks for joining us on this deep dive, everyone. And remember, knowledge is power, especially when things are uncertain.